Is a financial apocalypse right around the corner? According to Chamath Palihapitiya, we may be just 30 days away from a total wipeout. In this captivating video, we'll delve into the shocking warning from one of the most respected venture capitalists in the industry and the reasons behind his apocalyptic prediction. We'll also examine what steps we can take to protect ourselves and our assets, and what the future may hold for us all. Don't miss out on this thought-provoking discussion that could change the way you view the world of finance. Chamath Palihapitiya is a venture capitalist and entrepreneur who is widely known for his investments in early-stage tech companies and his outspoken opinions on a variety of social and political issues. He was born in Sri Lanka in 1976 and immigrated to Canada as a child. He later moved to the United States and graduated from the University of Waterloo with a degree in electrical engineering. Palihapitiya's career began at AOL, where he worked on the instant messaging team. He later worked at Mayfield Fund and the venture capital firm, the Mayfield Fund, before joining Facebook in 2007 as the company's vice president for user growth and mobile. He was instrumental in helping the company grow its user base to over 1 billion people, and he played a key role in the development of Facebook's mobile platform. After leaving Facebook in 2011, Palihapitiya founded the venture capital firm Social Capital, which focuses on investing in early-stage technology companies that are solving major societal problems. Some of the companies that Social Capital has invested in include Slack, Yammer, and Box. Palihapitiya is also known for his outspoken views on a variety of social and political issues. He has been a vocal critic of Silicon Valley's culture of greed and narcissism and has called for greater accountability among tech companies. He has also been an advocate for increased diversity in tech and has criticized the industry's lack of diversity and inclusion. Overall, Chamath Palihapitiya is a prominent figure in the tech industry and the venture capital world, known for his investments in early-stage companies and his outspoken views on a variety of social and political issues. In recent years, Chamath Palihapitiya has accused the Federal Reserve of artificially inflating asset prices and promoting irresponsible speculation. Also, he has sounded the alarm on a coming recession in the United States. The billionaire investor and CEO of Social Capital blasted the Federal Reserve Bank of the United States for keeping interest rates at very low levels in recent years. As a result of the lax monetary policy, investors were encouraged to purchase riskier assets, like stocks and cryptocurrencies, since the returns on savings accounts and bonds were so low. It allowed manias and asset bubbles to build in every single part of the economy, whether it's digital trading cards or art, or cars or real estate or NFTs or SPACs, he said at the Axis BFD Summit on Wednesday. It pervaded the market, it distorted reality, and it allowed manias and asset bubbles to build in every single part of the economy. Palihapitiya is perhaps most known for the spate of special-purpose acquisition vehicles that he created. With these vehicles, he was able to bring enterprises such as Virgin Galactic and Open Door to the public market. This earned him a lot of notoriety. According to him, the reason for the decline in the values of assets this year is because liquidity is being drained out of the economy. He said that manias will grow whenever free money is introduced into a system. Free money, these manias will come to an end now that money has been removed from the system, and you will discover the price at which the markets is clearing for a variety of assets. That which is known as a SPAC, according to King, the period of free money encouraged individuals to take unnecessary risks, which led to firms that were already losing money coming public at eye-watering prices. According to him, investors are starting to differentiate between high-quality and low-quality companies at this point in time. Palihapitiya also provided a response to the charge that he had earned large from his several SPAC agreements by cashing out, whilst individual investors who kept the stocks had suffered significant losses as a result of the market decline. According to him, during the boom years, people earned money and lost money on a wide variety of assets. He also said that even established and lucrative technology businesses like Meta have seen a significant drop in value this year. The former executive at Facebook took aim at Robinhood, accusing the company of not taking stock picking seriously enough as a business. He echoed the sentiments of seasoned investors such as Warren Buffett and Charlie Munger when he remarked, "This is not a game that was supposed to be gamified with confetti on an app." It is important to keep in mind that Palihapitiya participated in the GameStop mania in January 2021, made it public that he had acquired bullish call options on the company stock, and then sold those options for a substantial profit. The question of whether or not Palihapitiya anticipates a recession in the United States over the next 2 years was also posed to him. "Without a doubt," was the response he gave. "I really hope that is not the case. Yet, I believe that the probabilities are quite high that this is the case." Chamath Palihapitiya, an investor worth $1 billion, is of the opinion that decentralized finance, or DeFi, will one day make it possible for individuals all over the globe to monetize and financialize all of their assets, therefore making it possible for those assets to be kept on the blockchain. Palihapitiya, who once held the position of vice president at Facebook, is presently most well known for operating the venture capital business Social Capital out of the state of California. Since in a DeFi world, you would financialize every single asset that is feasible, all of the leakage that you now experience will be eliminated. You are certain that you will be able to finance your residences. You'll financialize your autos. You are going to put your watches, jewels, and artwork into an investment portfolio. In an interview with the Sensible Finance podcast, he said, "You'll financialize every odd event. You can borrow against it, trade it, and extract value into the future against it if you monetize it and financialize it. These are the options you have when you monetize and financialize anything. But, according to the CEO of Social Capital, everything will be monetized and recorded." Palihapitiya agreed with the presenter that individuals would even be able to monetize and financially ease their jobs if they use the technology in the way that the host suggested. At the same time, the investor said that, in the long run, the government would need an off-ramp to taxes of such assets, as for instance, a tangible home existing somewhere in the globe. It is impossible to conceal the fact that there is a real residence. Some assets will live anonymously, and they are the assets that don't need a physical manifestation in the physical world. It will be fine that it exists and that people get taxed on it, but it will be much more legitimate and simpler, Palihapitiya said. "But I think what this will create is a world where all these assets that actually really exist in the world, it will be fine that it exists and that people get taxed on it. I believe that individuals will choose incremental magnetizability over additional taxes." A recent interview that Palihapitiya gave revealed that he believes the next global recession is still in the future. In the following years, the whole globe will be afflicted by a severe economic downturn. He went on to say that it will be implemented in 2 stages. Both the supply-side recession and the demand-side recession will take place simultaneously. Yet, at the moment, the world is in the first phase of the recession, which is the supply-side recession. The recent supply-side slump in the market is the cause of the inflation that has just occurred, the demand for it being reduced as a result of the more money that is now being placed in and taken out of circulation. The demand-side recession is subsequently triggered as a result of this. The value of the asset will decrease to some degree. He believes that individuals still have a significant amount of savings, according to Palihapitiya. It was up to him to make up his mind that the economy was already in the beginning stages of a recession. He continued by saying that he despises being the one to deliver unfavorable news. Nonetheless, there is still a significant amount of money in circulation, which will lead to a contraction in the supply side of the market. On the other hand, he said that there are certain accessible indices that signal the forthcoming changes to the economy. Similar to how there is a shortfall in savings and a shift in the direction of the global economy moving into the second phase of the recession, his presumptions are that it's a signal when individuals used to be more motivated to re-enter employment after taking time off. Another notice will be sent out when the failure of credit begins to level off. As a direct consequence of this, many completely deplete their money. Then, they destroy their credit cards, and all of a sudden, they are uneasy. When all of these things have transpired, we have most likely arrived at a point. The initial stage of the supply-side problems will consist of that phase. After that, we enter the phase in which demand begins to fall. It's possible that it'll put pressure on the equity. According to Palihapitiya, very soon all of us will have first-hand experience of the global recession. Because of this, the recession can get much worse. As a consequence of this, the equity component is put under strain. As a result, we'll be facing significant inflation. His study indicates that we are now experiencing a supply-side recession that will come to an end in the near future. After that, we will go through a recession caused by increased consumer spending. These 2 stages are going to culminate in a significant economic downturn all across the world right now. We hope that this video has provided you with valuable insights into the dire warning from Chamath Palihapitiya and what it means for all of us. While the future may be uncertain, we can take steps to prepare for the worst and protect ourselves and our families. Whether it's diversifying our portfolios, building emergency funds, or being open to new opportunities, there are actions we can take to weather the storm. As we face these challenging times together, let's remember to support each other and work towards a better future for all. Thank you for watching, and please share this video to help raise awareness of the critical issues we face in the world of finance.